What Fintech can do is that it can create easy on-ramps, easy mechanisms, things that integrate with behaviors that you already have to take advantage of those to create new moments of value. There's ways to make payment really easy. There's ways to take points and things that you earn and use that to accomplish other goals that are important for you. And so as you find ways to integrate payment technology into day-to-day life, you enable people to think about and take action on larger goals or things that they want to do and create value for themselves. At the core of what I do is I'm a researcher and I understand people and I try to pay attention to people's behaviors. And the way that I help companies develop products is by observation and learning. All the really exciting financial technologies that I think are developing now remove some element of tedium or remove some element of lack of access. So making it easier to get a loan, making it easier to pay for something, making it easier for something to be delivered, making it faster to order something. So a statistic that I really think about a lot is that 47% of Americans have less than $400 available in case of an emergency. When we think about customers and the segmentations, a lot of times we think about folks who have a lot of high income. You're looking at people who are interested in doing robo investing, but where there's need is getting money quickly, getting access to credit, coming up with accounts that make it easy to do your transactions in a low-cost way. And so I think there's just an enormous customer base for a lot of products that has not necessarily been figured out how to serve people in a profitable way. I think with a lot of financial products, there's a tendency to make them more and more complicated over time as revenue is trying to be maximized by pulling out revenue from different segments, by creating new ways to monetize off of consumers. By changing these elements and making them more and more complex, you actually make it hard for your customer to understand what is they're buying. You make them nervous about using you. You give them a bunch of really negative and bad experiences when they fall into fees they didn't expect or they're paying more than they want, and they don't like you. There's a reason why financial companies have some of the worst NPS scores of anyone in the industry is because the marketplace isn't set up to create delightful and simple and easy to understand experiences for consumers. There's one product in particular that I'm really excited about, which is secured credit cards. So a secured credit card is one where you're able to put a small deposit into a financial institution and then get a credit line that matches that. And so if you were to default on your payment or if you were not able to pay back your purchases, that original deposit is then taken. So it doesn't actually cause you any problems. It's hard to have late fees with this product. And it also builds your credit. Here's a product that helps people be successful, that has low fees to it, that does things that are beneficial for them. I think financial technology, when it thinks about creating value, should put the customer first and think about what are simple things that you can do that create something that people want to pay for, that helps them accomplish their lives, helps them do what they want.